Welcome to another video from Creativo Solutions. You're currently watching the Finance for Non-Financial Managers video series. Please post comments and questions below, tell me what you're struggling with, and I'll create the video to help you. Please subscribe to the channel and you'll be the first to know when new videos are uploaded. There's more content and resources to help you on the website. We have an Instagram page, Twitter, and the YouTube channel is there to help you with more support. We know the financial environment involves different role players, and all of the role players are going to be part of helping the financial manager make good decisions. So when preparing information, we're going to have to look at financial reports. So we're going to be looking at accounting. Accounting helps us to make decisions because the accountants generate the financial information that can be used for decision making. So managers, shareholders, investors, the CEO, the government and competitors can all use that information. And the most important point to take away from the previous videos is decision making. The most important factor to consider when dealing with finance is making a decision. So we're using information to make a decision. So why do we make these decisions? Well, we need to establish what is the most important goal for a company or a business that's operating. You do get different forms of businesses, and we'll be looking at those in a later video. For now, we're going to be focusing on what is the most important goal, or what is the primary goal for a business in terms of operating. I hope you've given that question some thoughts. The answer to that question is maximizing value first before profit. When businesses are established, businesses are focusing on creating value for the end consumer. And if the consumer is satisfied in terms of the product or service, that business will continue to operate and will become valuable over time. So the most important thing that a company needs to focus on is maximizing value for its customers. And businesses do that in different ways. If we're looking at Facebook as an example, we know that value is generated because people are utilizing this particular product, or service as a platform to interact and to communicate with individuals, right? So Facebook has obviously grown in terms of their services and what they offer to their consumers. And Facebook is valuable because people use that particular platform. So value is important. When Facebook was first created, it was created with the end goal of creating value for its users. So the more users that use the platform, the more valuable the company becomes. Do you think Facebook is profitable? Well, let's have a look. Facebook is a public company, so if you search for the annual report, you'll get information pertaining to this particular company. So when looking at the investor.fb.com website, we're looking at the investor relations relating to Facebook. And on this particular website, you can actually scroll down and you can download information regarding the company's performance. And obviously, we're looking at the annual report because the annual report would have been audited and it would have been presented for the last 12 months, which is the last financial year. So the annual report that we can download currently from the website is the 2015 annual report. After having downloaded the report, you'll get a page that looks like this. And on page 34 of 140, there's a note about the consolidated statement of income. You can see you've got different years here, okay? And you can see that Facebook is profitable. There is a net income of 3.6 billion. Okay, those figures are in millions. So Facebook is a profitable company and Facebook is very valuable. Valuable to the consumer and valuable to the investors. So now we've looked at Facebook. We know Facebook is creating value for its consumers, and we know Facebook is profitable. When looking at the primary goal, we know it's to maximize value first before profit. So the question is, can an unprofitable business still be valuable? That's a question to consider. Well, if we think about this question, do you agree if I'm starting a business, businesses that start are generally not going to be profitable. Only very few businesses start and are profitable. So can an unprofitable business be valuable? Well, the answer is yes, as long as the company is making decisions in order to generate more value. or maximizing value, that company will continue to operate so long as they're managing their cash flow. So when focusing on finance, cash is very important because inflows and outflows determine how much working capital you have within the business. So when focusing on maximizing value, can an unprofitable business be valuable? The answer is yes. We've looked at Facebook, now we're going to look at Twitter. If you search for the financial reports for Twitter, Twitter is a public company, so this information is readily available to the public. If you go to investor.twitterinc.com, you will get information regarding the investor relations pertaining to this company. And if you scroll down, you'll see there's an option here to download the annual reports so that you can view the information. Again, the most recent information we have is for the last 12 months, which is for the 2015 year. If we download the report, we're going to get this information, and I'm obviously looking at page 40 to 41 of 112 pages. On this page, you'll see you've got the actual information pertaining to Twitter here. You've got the year ended 31st December 2015, 2014, 2013, 2012 and 2011, very similar to what we saw before with Facebook. And as you can see, if you look at this line item there, you'll see there's a net loss. Right, there's a net loss in 2015, a net loss in 2014, a net loss in all of the last 5 years. Right, so why does this company still continue to operate? Well, they're making loss after loss after loss every single year. The reason that Twitter can still continue to operate is because they're managing cash flow and they're still creating value for a lot of their users. So many people still use this platform as a way to communicate, as a social media platform, and therefore value is being created for individuals and consumers. And if value is created, this company is still worth something. Okay, and it's still valuable even though they're not generating a profit, they're generating a loss. Right, this is in thousands, so this would be a $521 million loss. Are they still valuable? The answer is yes, because they're still operating and they're still being used in terms of a platform for users to communicate. So we know Twitter is making a loss. If we look at this page, on page 42 to 43 of the annual financial reports, you'll see in the consolidated balance sheet data, you'll see assets are, this is the gain in thousands, so assets would be 6 billion, okay, $6.4 billion worth of assets, and their liabilities are 2.074 billion US dollars. If we look at equity, that's the amount of value, okay, that we can perceive that this company has in terms of its book value. Okay, looking at the equity for this particular company. Right, so their assets outweigh their liabilities, which is definitely good. So this company is still valuable, even if we look at the balance sheet. We know they're not making a profit, but there's still a lot of assets and value in this particular organization. So we've looked at Twitter and we've looked at Facebook, and we know the primary goal is to maximize value before profit. If a business is created for the primary goal of generating value for its owners and the public as a whole, and the consumers, suppliers, government, everyone, then that company is going to be valuable, and over time that company will be generating a profit, so long as they're focusing on maximizing the return for their shareholders. Can unprofitable companies continue to operate? The answer is yes. Why? Because those companies are still creating value. So value always comes first. Value is the most important goal for any company. If they provide value, there's going to be success in that particular business. So there's a famous saying by Albert Einstein. Albert Einstein is quoted as having said, "Try to become not a man of success, but try rather to become a man of value." So when focusing on all these different examples of businesses, all these businesses, whether it's Facebook, whether it's Instagram, YouTube, or even Twitter, they're all creating value, and that's why they're still operating, because that's the goal for all businesses: generate value for consumers. Thank you for watching. Please subscribe to the channel and post comments and questions below. Hit the thumbs up button to like the video, and if you subscribe, you'll be the first to know when new videos are uploaded.